some of Africa's key export markets, or the horticultural players and the agri-space, have negatively been impacted by the global economic slowdown, that with a bulk of its target markets being in Europe. To what extent has the global economic situation hampered trading activity when it comes to Africa's trade?
Well, we've seen a particular slowdown in the approaches for new business opportunities, exports mainly out of East Africa into Europe. And this is certainly the result of the credit crunch. And to transport goods very often by air over such long distances, it has to be lucrative business. And generally speaking, that means that it's upmarket products. It's cut flowers, it's coffee, it's teas. And the demand has really slackened off, particularly in Europe, for these products. On the positive side, we are seeing African, particularly East African countries, reaching out for intra-regional trade and doing a little bit more shipping from one African nation to another.
Well, strides are being made in that regard. I mean, funding is still a bit of a problem in doing and growing business as well. It has, though, opened up a gap for ATI specifically to leverage off. So run us through some of the initiatives you have in mind to actually leverage off the opportunity on offer.
Well, we have no minimum size of insurance product. In other words, we can go right the way down to relatively small exporters or traders. But one of the most recent initiatives is to start working in cooperation with some local banks here in Kenya to begin with a view to putting together a scheme that's optimized for the SME clients of a particular bank. It's branded jointly between ATI and the bank, and with the economies of scale that we believe an increase in this business will provide to us, again, we can hopefully provide insurance at an affordable rate.
Yeah, well, banks have been pretty resistant to financing such operations, though, I mean, with good reason, because they just don't want to take on any undue risk at this stage of the game. So what internal capacity are you meeting to actually meet demand that's out there where clients, I've been reading, would not need collateral as such?
Well, first of all, you know, banks have been accused in many instances fairly of being risk averse at this point in time. But remember that the average East African bank is an expert in its own marketplace, but it's not an expert in the credit quality of companies in Europe, companies in North America, companies in Asia. That's one of the things that ATI brings to bear, because we've partnered up with the Atradius Group, the second largest provider of trade credit insurance in the world, and they have offices in all of these countries. They know the companies in all of these countries, and this really is where ATI brings capacity building from overseas into Africa. Now, we ourselves have a single A rating from Standard & Poor's, and to put that into context, behind the African Development Bank, we're the second highest rated African institution, bar none, according to Standard & Poor's. So we bring our credit quality to the table, and a bank, whilst it lends against the receivables, it has our knowledge in terms of whether or not those receivables will get paid, and it's backed with our insurance so that in the event that the bank doesn't get paid, we pay.